Andrew Clennell, what are the political implications of this number as you read it?
Well, Jim Chalmers' office, I reckon they're sitting there going, not great, but could be worse. And I wouldn't want to be Michelle Bullock or the Reserve Bank Board because it's a line ball call. If it had come in 3.6 again, that's an easy call. Don't hike. If it had come in 4 again, that's an easy call. Not easy for mortgage holders, but it essentially would be we have to hike. It's right in the middle, isn't it? Not too warm, not too cold. The old Goldilocks figure, this one. So I think what's interesting about it, and you alluded to it, is this is bang on the Reserve Bank's forecast of 3.8. Do they then expect it to moderate, but for it to take a long time? That's their other forecast. The other significance of this is it's above the Treasury forecast from the budget, which was 3.5. And we know about that contentious forecast, which none of us really believe, that suggested that inflation could be 2.75% by the end of the year, just before an election. What a coincidence. So that doesn't look like it's happening, but it's the same as Treasury and the Treasurer forecast in the mid-year budget update in December. They said 3.75. So it really is a question for the Reserve Bank, with unemployment still so low. Do they want to get this over and done with, or are they happy to have higher than they would like inflation, but not too high for longer? And I am a betting man, and I reckon they'll hold. I reckon that's what will probably happen next week. It's a line ball call. Warren Hogan will come on with you in a second and say they have to hike. They absolutely have to hike. I beg to differ, Warren, at 3.8. But next quarter, if they wait for next quarter, well, then the stage 3 tax cuts flow in then, don't they? So they could look silly if it were to go up again. It's a really interesting figure in terms of it being so line ball. But I do think the overwhelming sentiment, Jim Chalmers' office, Kieran, not great, but could be worse.
Yeah, indeed. I think that's well said, Andrew. And Ross, if you've got to predict what the Treasurer would say, I would imagine he'll look at that trimmed mean or underlying inflation number, still higher than where the RBA wants it, but that is down from 4 to 3.9% in the June quarter. And Angus Taylor, the opposition spokesman, has been saying it's the underlying inflation that's most important. Well, that's actually down, albeit only fractionally, but it's down from 4 to 3.9 in the June quarter.
Yeah, the question is how long is it going to take? And remember, this is broadly an experiment to try and keep as many jobs as possible in Australia, to try and keep that unemployment rate as low as possible. And that's by allowing the inflation rate to stay higher than the target band, but not so high that it becomes baked in to wage expectations, into the insurance premiums you pay, into your energy prices. So these are the keys right now for the government and the Reserve Bank. I'm a bit with Andrew. I've got to say, this number probably leads the Reserve Bank. And what you'll hear Jim Chalmers say, I'm absolutely certain of this, is we're on the right track, we're on the right path, we don't need to deviate from leaving interest rates on hold. It would be politically the worst thing for the government going to an election right now to suddenly see interest rates rising, because if interest rates do rise, there will not be one rate rise, there will be at least 2. And that's where the Reserve Bank has got this fine line call to be made, because they've got to figure out whether inflation is sufficiently, whether they can raise rates twice without absolutely hammering the economy.
Indeed, and Andrew,
if
just
I can jump in,
to put
Kieran,
to you, Stephen Hamilton, I just want to mention to you, Stephen Hamilton, a regular on this show, he says he agrees with you and Ross. The RBA will not raise rates next week, with quarterly trimmed mean inflation at 0.8%, in line with their forecast, Andrew.
Yeah, well, that's, have they dodged a bullet, the government? Could be the case. Now we wait for the next quarter and see if they've dodged a bullet again. This goes on and on. Well, they're talking about inflation not really coming down till 2025. Perhaps we're in a situation where the government just doesn't get a rate cut before the next election. They don't get a rate hike and they don't get a rate cut. But I wanted to ask Ross this. Is there a third way? Is there a way that the Reserve Bank could lift rates by 0.15? Could they go the Goldilocks, the halfway house? Or is that not worth it?
That they could, but it's not worth it, because it actually doesn't slow down demand. It sends a message, but they'll be sending a message anyway by keeping rates on hold. The one thing I will say is if rates are on hold, then you could anticipate that rates are on hold not until early next year or mid next year. Rates are on hold until late next year if they're prepared to live with this higher than expectation inflation rate right now.
And Ross,